Oh, I'm back in business. I haven't been posting videos recently because I was on a vacation or something like that. So, I haven't been able to do much of anything in terms of trading or charts. But yeah, we are continuing to melt heavily, and market is not showing any interest into pushing higher. I can only but to think that we are going to melt below this next liquidity pool. Obviously, there's always a chance that we push higher a little bit, um, because okay, last week we had a little push, then we have quite measurable retracement higher, and we didn't really have much of this massive push and immediate push lower. But yeah, market could do anything in terms of continuing to melt, maybe even pulling a little bit higher. So I don't really like the current conditions. Like multiple days in a row, we melt from all-time highs absolutely massively, and we put on absolutely massive melt. And we could be in a point of turnaround, or we could just continue melting further down. So I need to be cautious at this point, because if I was, if let's say we are trading this day, you can take quite nice shorts because you understand that there is liquidity left, but we have melted heavily, like way too low, man. Um, we are entering into areas from which market could easily reject, and you shouldn't necessarily expect it to reject because it's so bearish. Um, but I don't see how I can just assume that market is going to melt down below these important weekly and monthly lows. So this is pretty much a price point where I need to be looking at if market could be willing to slow down. If it's not going to slow down, then we got some relative equal lows in monthly context in here. But these are very far down. So yeah, in general, just U.S. market has been plummeting lately. So um, that's that's about NQ. Yes, of course, similar stuff. We are in this order block here. Market is opening in 1 minute, 30 seconds, something like that. So waiting for that. It's very convenient that I have my indicators ready in terms of the true opening price. So 8:30 is here, midnight opening price, and the 9:30 opening price prints in 15 seconds. So we can see it live here. How that kind of works. So that's just my indicator key times, and then this one, new week opening gaps and new day opening gaps. Okay, New York open, so 9:30 open print here. And even though I have this, I don't like how the indicator draws the opening range gap, so I just draw it myself. So that draws from here to here, and then I just like to shrink it because the chart just looks way too cluttered if I keep it like that. So I'd go with that. And just you can just do it like I do. I think this is the best way to look at the chart. So just shrink your opening range gap like that. You can still see where it kind of is, but it isn't really on your way when you're trying to keep your charts clean. So how this looks is, to me, is that we got some highs here. We could easily return to these some equal lows at here. So taking into account that we are currently selling heavily off, I can't just go and assume longs. I would rather go short. Problem obviously being that I don't know, that there could be easily Tuesday like this where market doesn't really expand anymore lower and goes maybe like this, and then maybe PM session rushes lower if it wants to. So now that I understand that, and that you need to understand this, um, that market could just put on a retracement, and that's partly that is a reason why I don't want to take very rushed setups, because sometimes I'm willing to take like 9:30 open almost immediately a setup. In this condition, I'm not willing to do that. So what I would rather do is wait for silver bullets hour minimum, and that is the silver bullet hour. So wait for the 10 a.m. minimum. Don't take any trades before 10 a.m. because you know it just isn't looking very clean, the price action right now. And the reason why I want to wait for 10 a.m. minimum is because I'm not sure where market is going. Like you are bearish, you could easily just go short here, but that isn't really a clean setup in my opinion. Market could easily manipulate higher and then rush lower. So I don't want to be a part of a, let's say, sell. If I take short here, I wouldn't want to be a part of short here when I know that market could go higher. But if market has sold off like this and we are properly down and the time is correct, I could then consider shorts. But we need to see some type of action and market building structure, and the time just has to be correct. Um, I don't have time to explain all these things for you right now, but basically just certain things happen and tend to happen in certain times, and it's best to see certain things during certain times if you want to have like high quality, high probability setup. So that's basically the idea behind it. Let's just quickly look at the daily chart again. I wanna put on note. Wait. Let's go. 4-hour chart is fine. So you can see we got a lot of new week opening gaps, new day opening gaps here. Another new day opening gap. So this could be a new day opening gap that market comes up to and rejects, and that could work quite well as a sell-off, because we got midnight open here, we got order block. So that this actually, looking at this, I would like to see market come to this, maybe like a sweep some of these highs and then shift lower. I would probably participate in a short here if that was to happen. But if it just now melt lower at the market open, this could easily be a day when we just melt lower like this, as we have been trading lately. So if this is something that market does, I'm not willing to participate for the reason that I need to see some type of retracement. I need to see some type of liquidity sweep higher, buy side liquidity being taken, and it just isn't part of my trading to try to participate in every freaking move lower. Okay, I can anticipate that market is moving lower because we are trading lower and market is building very structured. Maybe I should go and take a short, but that's just not my style here. So yeah. Now I'm just trying to see if we could spark some type of retracement. Minimum to above these highs, I would like that. So these are actually quite nice looking highs. What's the equal highs for? So these happen around 8:30. Oh yeah, so the same highs in ES are like here. So that's 8:32 high. Yeah, so let's see what happens. Technically, this could be nice long. because we are sweeping some liquidity. This ESK into this gap, NQ didn't. 1045 low. So that's a SMT with the 1045 low, and that could be nice buy. But for specific reasons, I have some doubts in taking longs because of the heavily bearish trend. But I do see a situation where market would like to retrace a little bit, and this could be a session where market will retrace because of stuff like this. We put on a bullish price deck, we put on 5-minute SMT here, we do tag into the fair value gap here, we got some liquidity above, so we could easily just put on a move higher this AM session, and maybe PM session come back lower, maybe just gyrate around at the end of the day. But yeah, there are certainly some problems here why I wouldn't want to go long, and now we're putting absolutely massive candles higher. So let's say I wanted to go long, this would put me a little bit off because the candles are way too large. Like, where do I enter, where do I have my stop loss? That's large stop, and then you catch like 1-on-1, 1-to-1. I would be able to put my stop below this low, but yeah, I don't know where the so high volume candles come from. Forexfactory.com. So we got 10 a.m. news. So 10 a.m. news and kind of not so favorable price action. I would totally just not take anything as of now. Although we have taken now this high here. Could this be an SMT? So that's 826. So that's kind of large SMT. So ESK into this new day opening gap, sorry, and we put on like a large SMT here. So this could be a situation where if this large fair value gap inverses, this could be something. But I wouldn't still take it. I'm just take trading this because we got some liquidity still up here, and to those who think why I still mark this liquidity pool out, I just want to do it because this is fairly large liquidity pool in that this is like important 15 minutes high, and what market basically does, it is kind of just wicking above it, couple of points above it, and then just has massive drop off. Usually when I want to see liquidity sweep and like a proper one, I would want this to, after this type of very shallow sweep, I would want to see another bigger one like that, and then maybe shift lower. But if this just happens, then for me these are still relative equal highs, something that we could target. So market could have good reason to run back up there. With ES, it's a little bit nicer that in that we swept the high much better, and you can see what ES did. We put on one sweep, we put on another sweep, third sweep, fourth sweep, and then we drop. That's like a good fine sweep. Now you wouldn't really need to look at this liquidity pool anymore. With NQ, it's a different story. So, but if we could maybe like job openings, put on like a nice trade higher, couple of sweeps above these highs, and then shift lower, I would then try to maybe. I mean, now that I'm thinking of it, I wouldn't still short if we sweep the high here. I wouldn't probably short like this. I would most likely want to wait for another break of structure lower and then short, because this type of short would then be the more high likelihood, in my opinion, because at this point we would have put quite a large displacement higher, and this type of break of structure doesn't necessarily mean much. But I don't know. This is still a large SMT. We got balanced price range, so two fair value gaps lining up. ICT calls this balanced price range, and that's a strong POI for price. So now we're rejecting out of it. Now, if I wanted to wait for inversion, in all honesty, this is a little bit too large of an fair value gap. Like, you enter at the bottom of the fair value gap to get into inversion trade. Your stop is absolutely humongous. This is just way too high volume candle, and I don't like how it kind of looks. So that's kind of off limits, and I don't still think that we're going to inverse that. This looks like we're respecting it. It's more looking bullish, and if I had gone to my head to take a trade, I would go long from this gap and hope for the best. But I'm not a gambler, so I'm not interested in that either. Haven't been taking trades in in the last week because I was somewhere else off the charts, and maybe it was probably good for me. And when you get back to the charts, you maybe, at least I do have the feeling and the urge of taking a trade, but when you kind of resist the mind of trying to execute everything that you would want to take, and when you resist the mind, it becomes easier every single day, like, at least for me. But yeah, this looks like a fine long. Unfortunately, if market structure was truly bullish and we were looking like we are trending higher, this would be a trade that I would take, and it would look something like this. I would enter from the fair value gap. I would usually want to have my stop maybe like here, but because the stop is so large, I would just try to shrink it as much as humanly possible. So below the body of this candle would be fine, or here, target at the high, and maybe you are not able to get the 2R what I would want to, but this would be how the trade would look like. But obviously, high time frame context doesn't really support the idea currently. I mean, and this is the problem, because it kind of does support the idea. Like, I do see why market wants to run higher, but I just don't see why I need to be a part of the trade, because I need to mitigate my risk as well as I'm humanly able to, and this is just something that I cannot be part of because it's too high risk. We have been dropping heavily lately. I've tried to take longs a couple of times and they tend to go against me. We are trending lower, and I just find way too many reasons not to take the trade, so that's the reason why I'm also not taking it. And those couple of times because we have been dropping heavily, I have caught a couple of longs, but always, usually when the longs work, they are like higher resistance liquidity runs, exactly like this. So let's say the longs always work like this. They kind of give you the trade, but then it kind of just gyrates around like this, maybe sweeps liquidity like very uncomfortably low, then puts on massive candle higher, gyrates like this, and maybe runs the liquidity and your TP like that. And in all honesty, yeah, you want to take the profits, but I don't want to be a part of a trade that looks something like this. Like, this is total bullshit, and that's why I'm trying to also avoid longs. That's another reason why I try to avoid longs. So because liquidity runs liquidity runs happening lower have been recently more like high probability low resistance liquidity runs, whereas these runs higher are either not happening or they are happening with very high resistance and market is kind of just gyrating around way too much, which I absolutely hate. Um, I like to have the skill of holding a trade for a long time and being a part of these high resistance liquidity runs, because you can make money with these as well. But when you kind of have the choice, um, you always want to take the low resistance conditions. So I'm going to wait for the 10 a.m. and let's see how the Jolt's job opening is going to work for me. But this actually this is the first fair value gap, so I like to always mark that out. That's important point in price. The first fair value gap of 9:30 session. So when you get your first fair value gap, that is something that if I want to go long, that's a good place to go long. If I want to go short, in this case, that could be a good price point to go short from. Maybe like wait for inverse, wait for consequent encroachment, and then you can go short from the consequent encroachment. But yeah, lower time frame. This looks like a market maker buy model. In that we got the sell side of the curve, buy side of the curve, and this we put on like a very nice fair value gap here. So especially like 15-minute chart, it could work wonders. Yeah, I'm not gonna ramble anymore. Let's just cut to 10 a.m. open. All right, so we sweep the high. Now we are starting to melt. So this could be a point where I'm trying to get into shorts. The only problem just is that in 5 minutes we got the news. So there's certainly some problems coming with that. So I just have to wait and see what the news does. And if I miss the setup, then that's just what happens, because that's just what has to happen, because I can't take the setup before news this close. I don't think that's like a wise thing to do here. And this could be just a large display retracement. We don't actually haven't broken the structure here. And yeah, looking at these fair value gaps, we have inversed this, and I'm certainly bearish in a way. So this could, if I wasn't trading, if there was no news, I would totally be looking to short this currently. I would probably be like a little bit in with that inverse, and then I would add more to the position at the fair value gap here, and that would be like a double position looking like this, 2 entries. And I just want to take this trade, but I can't take this trade, and because of the news, and maybe that's something that saves me. Maybe this trade is going to lose, and that's going to save me, and I'm then not going to take the loss. And also, NQ runs so heavily up here. We are putting like absolutely massive SMTs here, so I like this. And if you watch the video back a little bit, I told how I want to see rejection from this new day opening gap, and that's exactly what ES is doing. And we're putting so heavy SMT that ES could, I want to see like a larger displacement, and then we can see like a shift lower. And I'm taking shorts with heavy positions, because I think this is a plus setup, and market could be printing soon. Very good setup, but I need like favorable reaction with the news. I don't want the news to absolutely smack lower. I would rather see wick higher, maybe a little bit gyrating, and then shift lower, and we can then look for shorts. But I don't want the news to. Hopefully news do not ruin this opportunity to go short. ES is looking heavily more bearish than NQ, but NQ is respecting this IFVG consequent encroachment of that, which I like. So 1 minute fair value gap, and we got 2 minutes to the news. So let's see what we have. But yeah, I like what I'm seeing right now. Not much to say other than that. Okay, around 10 seconds for the news. You know, this could be a trade where if you are in this trade right now, the news could just smack price lower and you make absolutely massive profits. Or I don't know. Let's see if the news move at the market at all, because sometimes it's a little bit lower volume, but yeah. So look at this. So if I was in this trade, I would have taken profits below this low, because you know how news work. Sometimes when the initial move happens slower, the following move is going to be this. So especially when you tap into the first fair value gap here. So if I was in this trade, I would have taken like 50% of the position out here. And you know, a couple of seconds later, we are back into the break even had I taken the position into here. So there are some things that needs to be learned through experience and stuff like that. So I have a couple of times held over news, and you know, what did I say? If you don't take the position out here, you're going to lose. And that happened in a couple of seconds. Market just smacks lower, and you know, if it smacked or put the wick higher first, you would have lost, and then it would have probably moved lower. But you know, the first move lower is usually the fake one. So that was a good call. But unfortunately, or you know, I saved my ass by not taking the trade, and this is exactly the reason why you need to look at the economic calendar and not trade during the red folder event. But now we put on a wick lower like that. Now I'm very interested in shorts again, because we manipulated higher. So now I'm monitoring setup fairly closely. I would still want to see some type of structure being built. So this is not quite good enough. If you put on like a bearish fair value gap on top of this IFVG, I'm going to take setup here. But we need to see this 1 minute candle close, and then another one, and then God willing, I will take the setup. It's expanding heavily lower right now. Yes, looks good. You know, unfortunately, this could be a day where I see every move, I'm able to call it, yet I'm not able to make any money, because sometimes market just moves, you know, according to your bias and according to your plan, but a little bit ugly or nasty, or maybe a little bit too high volume candles or something like that. And that's kind of what this has been today. Like a couple of candles after the news, and we put on absolutely massive candle lower. Like, this is way too large. I would want to see like a nice large displacement, or not displacement, but like retracement candle higher, and then I would be willing to take short from order block exactly in here. But the probability of me missing this short is now high, because the retracement would need to be very large for me to get into short, and this is moving way too fast. So but I'm definitely looking to take a short if market is in favor of me doing that. So how that would look like, the ideal short would be, yeah, I don't need this here, but from this order block, just stop would be a little bit too wide here, I would have my stop here, and just target wherever you want to target. But unfortunately, the market is melting way too heavily right now, and I cannot participate. But I'm always happy when I can call the market, and I have recently found a lot of success in that, and that's very good in itself. But yeah, unfortunately, way too large displacing price action. So let's see if we can put it like a retracement. Large retracement here. I would then want to see some type of reaction again from the areas here to go short. Yeah. Okay, fairly good retracement here. I'm probably trying to take a short here. I'm just trying to measure the position size. Yeah, the stop needs to be large though. If we don't put like absolutely massive retracement, I'm trying to catch like a inverse lower here, but if we can have like a retracement up here, I'm taking the trade. I just don't like the large stop. And we do have potential to move lower, so the RR wouldn't be bad actually. Okay, currently just waiting. Okay, so just for the sake of it, I took basically the smallest position that my broker allows in here, just to be part of the trade. But the majority of the position will be added in at around this 830 price if we can get there. And if we don't get there, I'm trying to monetize on inverse here. But yeah, I do have multiple ideas currently, so let's hope for the best. So that's around, the entry would be at around the C of this large wick. So let's see if we can push there. All right. So I got a good entry around here. Now this could be, in all honesty, this isn't looking that nice, because I don't know. I just got the gut feeling that large displacement lower. This could be just like high resistance day when it isn't really moving much. And that's the reason why I need to have my stop above this high. Like usually I could have it like here, but I've seen way too many times when price is a little bit high resistance, and then it kind of just maybe goes very close to the high here, but doesn't really take it, and then it kind of gyrates, and that would be perfect place for my stop loss. Yet I would have my stop loss like that, and then what market would do is like I have my stop loss like this, and market just sweeps it. This high is still protected, and then it kind of melts. But yeah, so yeah, I'm managing my risk very well currently. So I don't like this price action very much though, and there are multiple reasons. But the reason why I don't like the entries from here, because sometimes they do work, but I see way too often when price dumps like very heavily, or it doesn't have to dump, but just put on like a nice, very large displacement. You know, there are often these times where price, because of the large displacement, price also puts on large retracement, and that can offer you good setups, but you just have to wait and be patient to wait for the proper retracement higher. So let's see. I have the majority of the position is here. So my average position is average fill is probably this. Yeah, around here. So currently I'm break even currently. So with the two positions, so that means the break even or the average fill is here, and my stop is here. So let's hope for the best. At least the reaction right now is decent, and we are respecting the gap. And the NQ isn't looking that as good as ES, so maybe I should start trading ES a little bit more. But ES is looking good right now. So, and you can always lose. That's totally fine. And I'm not afraid of losing. I've made nice amount of profits these last couple of months, and I've seen a lot of improvement in my trading. So I'm not afraid of losing, and that's totally fine. I know that even though I haven't been losing much lately, the losses will come eventually, and that's totally fine. Now we see 15-minute chart. We see a fair value gap here. I want to see this being inverted. 15-minute candle closing in 2 minutes. We need to see this inverted, because that would be very nice for my trade. But yeah, the target is definitely previous lows here. I might and probably will take some off at the low here, because we are in a range where there is probability and likelihood of some choppiness, because we see a very large displacement here. That could mean that we sweep liquidity and then see another large displacement higher or something like that. So this could be problematic, and that's the reason why I would want to take profits out and move break even at the low. But yeah, currently I'm just measuring my TPs. So if I held both of the position to TP, that would be around, so the full TP sell side liquidity down here, that would be around 3% profit, which makes sense. 3R, around 3% profit. But I will close probably like half of the position down here, which translates into maybe like 1.5% profit if I get if I close half of the position here and the rest runs here. That would be probably around 1.5%, maybe 2% for the day. And also there is a chance that if market now inverses, let's say this very nicely, I could take another short and move my stops to here. That would allow me to get even more profits with similar risk level. So, but let's see if we can inverse this at all. Open range gap currently in here. Nice reaction out of the area. This is pretty much the moment of truth. If we hold this gap, market could do this. If it flips it, then it's probably just running lower, at least below this low. So let's see. It's kind of slowing down here, but this day has been, or clearly is, a little bit more high resistance. Because if you're looking at the New York Open, we are still at the New York Open. We haven't moved away from it. We are touching the midnight open price. We are just basically gyrating around this opening price. Midnight we haven't traded anywhere from midnight. We just kind of go higher, 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 sweep liquidity back always to the midnight price, and now we are bouncing away from it again. But yeah, I'm totally fine. If I had missed all the setups currently, I would probably take a short here with ES, because this looks actually fine. We break structure here. The only thing we didn't do is inverse this gap, but it doesn't really have to do that, because we are rejecting from an area where I want to see a rejection. It's doing exactly that. We broke structure. So this could be a setup on its own, but I'm obviously with this NQ setup, so I'm not taking that. Nor am I trading ES anyway much. Like, I used to take some setups on ES and it used to work very well, but sometimes ES is just a little bit more choppy, and I like the volume with NQ, so. Because sometimes I take like the ES setup and the NQ one works very much like better than the ES. And then I just decided that, okay, I'm going to try to trade with NQ mostly. And maybe I'm going to, when I get better, I'm going to incorporate this more into my trading. But right now, NQ is doing wonders, and I have no problems with that. So we're just executing with NQ. But it would be very hard to trade if I didn't have ES as well, because of the conviction and bias that ES kind of provides. It's very actually important for me. But let's see if we can inverse this gap. It's kind of gyrating around here. Yeah, that's inverse. That is inverse, but actually the first fair value gap is here. So even though I'm in profit, market isn't really breaking structure through these external price points. But one do I like is that we traded back below this first fair value gap, which can work as like a resistance for price. Oh, well, I don't like this, but we still have this first fair value gap protecting price. So let's see if we can respect this. If market trades back above here, I'm closing the position, because it is very good that we trade down. It's very good that we are respecting this first fair value gap, but this should be a price point where we shouldn't come back up. And if we do come back up here, original risk 1% in here, you can imagine how small the risk or the loss would be above the high here. So I'm simply just going to mitigate my loss would that happen. Partly because the loss would be so small that it doesn't really hurt me, and the other reason is that if we come back up here, yeah, we could just melt heavily down, but I don't want to be a part of the trade that takes so long to trade. I don't want to be a part of the trade that takes so long to play out. I would rather be in low resistance liquidity run, which this isn't really, because low resistance liquidity run would trade back to this first fair value gap and just melt further, which would mean that we would be currently trading somewhere down here. We are not doing that at all. It's something, it's just stalling around. It's more bearish than bullish, but there are certainly some traps here that could hurt you. For example, if I took like a inverse trade here, because that actually is fine trade in my opinion. Like, that was my plan. If I was going to miss the setup here. I would have taken the inverse trade, and then you put a little bit tighter stop loss than usual, and you are getting out of the trade, something like this. And I wouldn't really like to have my stop here anyway, because we got fair value gap here, and market could easily just liquidate a couple of these highs and then run lower, which would mean that if you take the inversion, you then need to have your stop somewhere here. And this is just something I don't like to look at all. But currently, as I told you, the first fair value gap is strong point of interest, and price likes to react at around that area. So currently it's doing exactly that. We kind of inverse it here but don't respect it the first time, then we reclaim it, and now we're respecting it. So let's see if we can have like a proper break this time lower. It's looking fine currently. And yeah, I'm just looking to close half of the position at the lows here, or maybe like 1/4. Let's see how much that would be. %1 at the low, if I close 3/4, and if the rest I let to run all the way down, that would be around 1.5%. That's probably what I should do here. So close 3/4 here of the position, and then the last quarter should be left here. Because this is large price leg up here, and yeah, I'm anticipating price to move lower, but I'm not that kind of trader who holds very long periods of time. So I'm willing to hold for a long period of time if that's what it takes. But if market is willing to hit TPs before 11 a.m., that's my preferable choice to take profits. So let's see if we can stab below the low. Yeah, I'm going to close 50% if we hit that low. Would be super annoying if we put like equal lows now and then doesn't take my TP, but whatever. Now we've broken back below, and I would move my stops. My trailed stop is right here, so no chance for taking any type of loss anymore. So that's my trailed stop. Above the first fair value gap. Waiting for the partial close. Just looking at my other screen where I have my trading software. It's very close. Okay, that's 50% taken profits out. That's very good. And then I'm just waiting for the rest of the TPs to hit. So yeah, still in with the 50% of my original position. These are the times when price could accelerate heavily. So, sometimes it takes a long time for price to get into the liquidity pool or the first liquidity pool, but then once it gets there, it likes to accelerate, and that doesn't mean that it's going to happen now, but I've seen that happen multiple times. So seeing very nice melt right now. And market is accelerating further down towards the Asia lows. So just waiting here. All right. It isn't really. It's not really accelerating. We put like small fair value gap, which doesn't really mean anything for me. So I would just want to see larger displacement because, as far as I'm concerned, we're still trading in bullish fair value gap. We probably have some type of bullish SMT still because ES is so much further down, possibly. Yeah. So let's say ES, if ES takes the Asia low, I'm probably going to close the trade with NQ as well. But yeah, this is the 5-minute bullish fair value gap, and ES is probably already taking this low or something like that. So there's certainly some type of possibility of some bigger retracement back up. I'm hoping that that doesn't happen, but it's totally fine if it does. I have my trailed stop protected up here, and I've secured all the profits, so there's really no stress with this trade for me. Like I'm just willing to hold, and there is still a lot of room to run lower, and also retracement here should be allowed because this is just like a healthy break of structure lower. That could be healthy retracement and another move lower. So there's really no need to get nervous at all. But yeah, it seems like we are putting some type of retracement here. All right, so finally, accelerating further down. I'm close to closing some of my position here because we are hitting some liquidity soon. Let's see. Okay, I closed another part of my position, so this is how it goes. 50% off or 50% TP here. That's the 25% TP, and the last 25% will be off here if market can get there. So that's how it works for me. And I wanted to close position here because we got large range here, and you know, ES is running all the way to the Asian Open, and I'm just not so sure I want to be part of this anymore. I will probably actually close the rest of the position very soon. So maybe like after we push, actually. So I'm not actually. I just changed my mind. I'm not gonna wait for the position necessarily to run all the way down. Yeah, I took that out. So that's 100% off here. Let's see how much I made with that. That's what 1.5% profit, and that's 2R. So it was a little bit more slower than I would have wanted to, but we did have a couple of very nice displacement candles slower, and then I had to like wait for a little bit here, and there is a chance the market is still going to continue lower like that, but I'm totally fine with this. I'm another win in the books, and yeah, haven't been trading for a while. Took like a week off. First trade of the week, and we caught a nice winner. So couldn't start the week better. Monday I also missed the trading day for specific reasons, but it wasn't anything special for me when I looked at the session afterwards. So yeah, Monday basically just melted. So we didn't really put on any proper retracement in terms of like buy side liquidity swept. But I hope you got some value off of this, and if you would like to support the channel, please like the video, share and subscribe, and go follow my TikTok, and yeah, see ya.